YouTubers, Mike Martin's here, Mike Martin's channel. I got a really good article that was sent to me, and it kind of breaks down how the economic collapse is going to happen, how the breakdown is going to happen. And I want to read this to you guys. It's a beautiful story. Somebody left me in the comments a link to it, so I got it right here for you guys. Sorry, the pages are kind of sticky together here. I'm still outside with Miguel. If you watched my video before, he's snowing in that car. You see him right there. He's packing up the snow and piling it up in the car where he cleaned the spot out. So I'm covering this story here, you know, kind of what's going on. I want to see if the owner comes out and says, "What are you doing? Why are you snowing my car?" And watch the video before. I'll explain this. Anyways, it's a really good one. The Bank of Canada just laid out how the economy could tank. The bank has taken to YouTube to warn Canadians about the dangers of too much debt and unrealistic house price expectations. Will anyone listen? In recent months, the Bank of Canada has ramped up its warning about heavily indebted households and unreasonable expectations driving the housing market. Yet all indications are that Canadians have stuffed cotton in their ears. In Toronto, for instance, house prices are nearly 15% since the summer. When Bank of Canada Governor Stephen Poloz warned of price gains in the city were difficult to match up with any definition of fundamentals that could point to. Yes. In more than 15 years that Teranet-National Bank House Price Index has tracked property prices in the city, there's never been a 6-month period when prices rose that fast. Meanwhile, the largest figures released by Statistics Canada show that household debt to income ratio broke yet another year record in third quarter. I've been talking about TDS, guys, total debt service ratio, and CGS. Now, Canada's central bank is trying a different platform to get its message across on YouTube. Why, what's wrong? No one's watching the mainstream wavy gravy media anymore? In a video posted Monday on YouTube, in conjunction with the release of the bank's semi-annual financial system review last Thursday, Bank of Canada Senior Policy Advisor Joshua Silvey sketches out how Canada's dangerous brew of debt and inflated house prices could combine and devastate the economy here in the scenario that worries the bank. So it's going to break down scenario here. I'm going to leave the link below because you can see the actual video itself. 1. As the bank has pointed out already, households are highly indebted and house prices are rising to an unsustainable rate. Though, Sylvia observes, people can often cope with these vulnerabilities for an extended period. Yeah, it's called working 4 jobs and hoping money falls out from heaven to drop on your lap. 2. This is, until the economic shock triggers, a negative chain of events. For instance, a severe recession that would lead to a sharp increase in unemployment. Well, everyone's moving away from the city, and if very technical or specialized companies can't fill in their positions with qualified employees, then what's going to happen? They're going to have to shut down and move away. 3. A lot of households, especially those carrying the heaviest debt loads, would have trouble meeting their debt payments. As a result, some households would start to default on their loans, and in turn, banks can trust companies would foreclose and try to sell their houses. 4. At the same time, with the economy slowing, new buyers would delay house purchases until the economy has improved. Given the challenges already facing the economy, this could cause a large drop in housing prices. See what happens when you tie economy into housing? The country doesn't have anything more to tie in, like oil. Oil is down. Everything's down right now. Just exports are down. And now with Trump coming into presidency, everything's looming. Markets are down. So why would you tie into housing to sustain the economy? Just do student loans. They're doing that too. Anyways, number 5. If house prices fell, it would push down the household wealth, which has received a huge boost from the housing boom, and that could curtail consumer spending, which itself has become a primary driver of growth, and added stress to the financial sector would also weigh on the economy as lenders cut back on making new loans. Sylvie doesn't use the term, but he's talking about a credit crunch. How about a huge crash? How about not only that, but people are underwater. Basically, their houses are worth less than what they bought them for. I mean, that's not a good thing to wake up to, but it's a reality that people have to succumb to. There is good news, Sylvie says. Stress test shows Canada's big banks will be just fine, even if large drop in housing prices. It's also important to note that the bank, in its financial system review, said that there is a low probability of sharp correction in the housing prices. But there's no getting around the immense damage such a scenario would have on the economy. I'll tell you what the scenario is on the economy. People are going to try and unload what they can for what they can get it for. If they're underwater, they're going to probably just try and walk away from their mortgages. But apparently you can't. So you're stuck with it forever and ever. It's like a bad cell phone plan that you can't get out of unless you pay out the whole friggin' contract and pay out the phone and pay out this and pay out that. So this is worse than a bad cell phone plan, because this one here, not only you get your credit destroyed, but they start garnishing wages and finding ways for you to repay it. This is not good. The video, they're going back to the video on YouTube. The video is a break from regular fare on the Bank of Canada's YouTube channel, which is largely made up of speeches of top bank officials. And even if Sylvie's delivery is trademark central banker dry, the message is stark and shows that the bank is desperate for Canadians to heed its warnings on debt and rising housing prices. If there's one quibble to be made, it's with initial domino that the bank sees setting everything in motion if severe recession leading to job losses. Since the U.S. housing bubble popped, that country went into its long dark funk. Chicken versus egg debate has ragged over whether the housing collapse triggered the U.S. recession. It's just the backed securities, mortgages were backed into securities, and people were buying them on markets, and then eventually the markets tanked, and housing market went along. Everything just tanked. Everything just went back to its corrected value. You know what I'm saying? Or whether something else like soaring oil prices brought on the debate in that America's housing market reached its frothiest in mid-2006 and then began its decline 1.5 years before the recession began. Wherever the case, the bank's video should be another wake-up call for Canadians. Whatever the case, for Canadians, got that. Not that anyone's listening on. On the morning of December 20, the video had little more than 600 views, updated a day after it published a post. Number of views had declined. But anyways, guys, I wanted to put this out there. It's intense. And then I'm following Miguel here. Look at him. He's snowing in that car. He's been here for 3 hours. It's cold. No, well, not cold, but it's pretty cool. And he's been snowing in that car. He got really upset that people went and parked in his spot. And I guess, he has all fairness to be upset about that. And there he goes, man. He's been snowing in that car. So watch my first video about that, and you guys get a little inside prognosis on this. And let me know what you guys think about this housing fiasco that's going on. I really would like to know what you guys think. It's the inevitable. You can't prevent the inevitable, and why? I know nobody wants to see. I know no one wants to see people lose money, but it's part of investing. You see, you got to understand that I'm going to invest in real estate. Okay, so you're investing. There's a chance. Investment. If you look up Webster's dictionary on what the definition of investment makes, it means you're making a prediction in the future. You are putting an asset or money or whatnot into land or stock or into a company or into something that's a potential business proposition, and you're basically predicting the future. You're predicting that either the stock will go up, the housing prices will go up, or whatever you're investing into is a prediction. A lot of people don't know that. They think there's a lot of education behind when it comes to business. No, it's predicting. It's lots of prediction, forecasting the markets and seeing where things are going to go. And if you're not paying attention to the basics of what's happening in the market and you're still buying into the market, man, we're playing Russian roulette, you know. Anyways, so just be accepted to take a loss, plain and simple. Anyways, comment below, let me know what you think, and don't forget to hit the subscribe button. Bye.